Hi, for anyone that's watching, I'm Kate and I'm from M. Property, and this is
Tracy Jukes from Hazelton Mountford Jefferies.
Tracy and I are very good friends, and we get together quite a lot to socialise, chat about work stuff, recommend each other. And tonight we're having a family barbecue and we got chatting about work stuff, and we said we should have filmed this, so that's what we're doing. So what has prompted our conversation is the change in the base rate. Now, I am a property expert, some might say, and Tracy obviously is the financial person. So for everybody that I'm speaking to, it's like, well, what does that mean for me? What happens next? Is it going to drop even further? Is the market going to change? And things like that. So that's what we've been discussing. So Tracy, what do you think of the change?
It's brilliant. We've had 14 consecutive rate hikes since December 2021, and it's been long awaited that the Bank of England would drop the rates. We weren't sure whether they were going to do it in August or whether they'd delay till September, but we're really pleased that they've actually done it in August. I think it'll give the market a boost. I think hopefully for people that are refinancing, reviewing their mortgage, or wanting to move property. So it'd be interesting to see, what it does to the market.
Yeah, and that's really good, because obviously we need all these positive talks about the marketplace, because everybody's been a bit worried since, I think, probably when the interest rates first started going up, and they were like, "Ugh, the market's going to crash, let's hang fire, let's stay put, let's do this," and stuff. And I think for people, like normal people, like me and my family, we are thinking, gosh, our mortgage is coming to an end. How's that going to impact us? And should we be looking at trackers? Should we be looking at fixing our rates and stuff? And I think that's why it's good for having a friend like Tracy that I can say, well, what should we be doing now? So in our situation, I know that I've been discussing it with you, but I think it's quite good for people to understand how it's going to affect us. I was literally on the cusp, wasn't I, about having to renew our mortgage, and we were like, fix it, tracker, fix it, tracker.
Yeah, and I think that's a difficult decision on the basis that the tracker rates are sitting higher than the fixed at the moment. So there is a clear difference between what you can obtain for a tracker rate and what you can obtain for a fixed. And I think then what we look at for people is it worth taking the risk going on to a tracker, paying a premium for a tracker rate to wait for the interest rates to drop? And I think we can only go on predictions within the market, and at the moment the predictions appear to be that Bank of England are likely to drop the rates by another quarter by the end of this year. Moving more positively forward into next year, we think they will actually drop the rates further, but of course they are predictions. I think sort of next year, hopefully we will see further rate drops. And I think and these again are predictions, by 2026, we see that rates may sit around about 3.5% for Bank of England. Now, that doesn't necessarily mean that the fixed rates are going to be at that level, because that's a decision that the lenders make, for their own policy. And I think in the last few weeks, we've certainly seen lenders start to drop their rates in anticipation of the Bank of England making that adjustment. So that's been positive. For us as a broker, we can't sort of foresee what's going to happen. We can go on predictions, and it'd be lovely to have a crystal ball. I always say that if I had a crystal ball, it'd be brilliant, albeit I think we might be laying the Caribbean now if we had one of those. So as I say, I think it's important that people review their mortgages. The benefit of speaking to specialists like you and I is the fact that we get a good overview of the market, and whilst it's a case that we can only go on what's happening now, actually for people that are due for review or wanting to move property, it's something that we monitor as well. So we may have people that we've reserved products for that are coming off their rate and have conversations like we've had conversations about your mortgage. How do we deal with this? What do we do? And it's about risk, security, all of those discussions we will have, but actually monitor the interest rates and what's happening with the lenders. Whereas with a lender directly, for argument's sake, are they going to contact you and say, oh, we've dropped our fixed rates, let's change your mortgage offer? as far as I'm aware, they don't generally do that.
No, they don't.
So the benefit from our perspective is we are able to look at all of the lenders, see what they're doing, and actually give advice on an ongoing basis, and we keep track of what's happening. So certainly in the last week or two, we've been contacting our clients and saying the rates have dropped, we will reserve the better product and obtain an updated offer for people, which is beneficial.
Yeah, well, that's really good, and I recommend anyone speaking to Tracy or equivalent to Tracy, your broker, if you've got one, just to say, right, you gave me a mortgage in principle, or you have, I've got a mortgage offer on a property that I'm buying, I'm completing in 3 weeks' time, has the rate changed? I think you should be getting that advice, and that's obviously what Tracy's been doing for me.
It's very important.
So what do you think about, because obviously what we've been missing in the market is investors, and again, some first-time buyers. I think prior to the rates going up, first-time buyers were looking at properties 300, 400, which we hadn't ever really seen before. Now we're finding that isn't happening, when the first-time buyers are struggling a little bit more to get as high as that. And someone I was speaking to today, actually, they were saying, if we put our house back on the market, we'll get some first-time buyers for it, and it was around 350-ish. Are you finding that first-time buyers are still being able to afford that level? Or how?
And I think we've seen, considering the market changes over the years, and I've been doing this job now for a long time, I think property prices over that time have naturally gone up. But whereas the first-time buyer focus used to be the lower end properties, I think it's a lot more diverse now. So, we're still seeing a very varying sort of level of first-time buyer purchase. But obviously it's always been down to affordability. So as long as the income's there, the affordability's there, the lenders are always going to base it on that, because they have a responsibility to lend sensibly. And I think with the rates changing, where it will help, first-time buyers or anybody, is the fact that it makes the mortgage payments cheaper, and ultimately it then gives them a view of being able to afford something greater. In terms of the affordability for the lenders, the rate change from a residential point of view hasn't at the moment, and it may do, made a difference, because they will still look at income multiples, affordability the same, even though the rates have changed, for argument's sake. And where it will benefit people will be the buy-to-let market, on the basis that as the base rate drops, the calculation that's used for what rental income is required to fund that property will now be lower.
Yeah, so, which is really good, isn't it? Because I think it's horrible at the moment when we have a rental property on and we're putting it on, and literally within 2 hours of it being on the market, we're having like 20 emails coming through, if it's late at night or whatever, and you're seeing them all coming through. And everybody's so nice that you want everyone to get it, but obviously you can only go to one person. We're finding a lot of landlords coming out of the market. Do you think this might end up making them come back in? Do you think it's a positive thing that needs to be promoted, that they should be buying more?
I would hope so. I think further rate drops is certainly going to help that, because landlords have been very much squeezed on their margins for various reasons that have gone on over the last few years or more. So I think with the interest rates coming down, it will certainly help landlords, investors, and we talk about yield in terms of their mortgage payments. If the mortgage payments are lower, of course it's going to help the profit that they're making, isn't it? And it's not always about profit, but equally, people that are going into the property market as an investor, they need to make sure it's profitable, because why would you buy something if it's going to cost you money as an investment?
Yeah, no, and that's really good. And I think that's what we need, but we need it to sort of be out there and encouraging people. And I think anybody that's even thinking that we're renting at the moment, we're paying £1,300, £1,400 a month rent, and we can afford a mortgage payment. I think now's the time to be speaking to Tracy or Tracy's equivalent. I'm not trying to push Tracy by any means, but I think we love encouraging people to get on the ladder and help them, give them advice. Also, I think that it's planning for your future. So even if it's right now we need to save this much money, we can't do it right now, but we need to be getting this much money behind us, or we'll speak to family and things like that, now's a good time to be planning it, especially with those rates coming down. If you were thinking of putting everything on hold, I actually think, from my point of view, that now's the time you should be looking at properties and planning for the next 12, 18 months, 2 years. I don't know if you agree.
Absolutely. I think it's always worth people speaking to a professional if they're thinking of buying a property or saving towards one. As you know, Kate, I don't just get involved in mortgage advice. I'm actually a financial advisor as well. So it's always very much sort of sensible to gear yourself ready, know what the options are, so that you can make an informed choice.
Yeah, great. Well, I think that's probably enough, isn't it? Unless you want to say anything else about what you think is going to benefit.
No, absolutely. I think it's, my advice would always be speak to the professionals, the likes of Kate or myself. Take as advice. We're here to help. Very passionate about our jobs, I think, and on the basis that our Friday night barbecue, we thought we'd talk about the market and what's going on, and really hope that there's further rate cuts. It's positive. We've waited since December 21 for this, and I think it will give the markets a boost in general, the economy, in terms of what the government are trying to achieve, and obviously the Bank of England setting the monetary policy. If we can see those rate cuts and inflation continues to sort of stabilise, as it were, and meet the targets, that's what we all want, isn't it?
Yeah. Well, I think it's positive things all
positive
round.
news.
And if you do want just to ask any questions, there's no obligation at all. We will help you wherever we can. So please feel free to email us or call in, and we can always put you in touch with Tracy as well.
Yeah, absolutely.
Yeah. Cheers, Tracy.
Yeah, cheers. Happy Friday.
Yeah.